What is the best indicator to use for trading? The answer for that is not as straightforward as you may think, as there are many indicators out there that can be used very well in different scenarios, and depending on the situation, different indicators may be used. But in my opinion, there is one indicator that stands out above the rest and can be used in most strategies and in most trading situations, and that is the moving average. A moving average calculates the median price of a chart depending on the time period that you provided, and it will give you the average price based on that time. So just to show you how a moving average may look like, I will enable a couple that I have here. So moving average is an overlay of your chart, so it will appear in your chart among the candlesticks that you have there, and it will be a line, as you can see here, a line that it goes up and down depending on the price. So this moving average is calculating the average based on 50 candlesticks, 50 prices before the current candle. So this candle and this line right here will be calculated based on the 50 previous prices of this candle. And this can be used in many different ways. And one of my favorite ways of using the moving averages is identifying the trend. So what I usually do when trading is enable two moving averages, one long term and one middle or short term. And my most common ones are the 200 period moving average. So the white one here is the 200, which calculates the medium based on the 200 previous prices, and the 50 moving average, which is calculating the moving average based on 50 previous prices. And based on these two, I can identify where the trend will be heading. So in this case, the 50 moving average, show the short term moving averages, is above the long term one, meaning that we are currently in an uptrend. So in the case of the short term being above the long term, we are in an uptrend. If the short term is below the long term moving average, we are in a downtrend. So I keep that in mind when trading and only look for trades that are with the trend. So that is one thing to keep in mind. So in this case, the price is amongst these two, and this is actually a trade that I got earlier on, and I went long with this. So I bought at this price right here because we are trading with the trend, and due to another reason, well, along with the strategy, but another confluence that I had from the moving averages is that it hit the moving average. As you can see here, the price was heading downwards, and you can see this long bear candle right here, and it got rejected with a candle, an engulfing candle on this moving average right here. So instant rejection and then pushed back, and you can see that moving averages can be used as support and resistance zones, similar to support and resistance zones, and you can use them to get on trades similar to this one. I'm not trading just with moving averages, so I wouldn't be trading just because it hit the moving averages, but it was an additional confluence and an additional reason for me to be entering. So moving averages can be used both for identifying a trend and also for support and resistance zones. And lastly, another thing that I usually do with moving averages is ask myself, am I buying or selling at a good price? And what I usually want to do is buy at the price where it's cheaper, for example, if I'm buying, or very expensive when I'm selling, and that I can identify with the moving averages. So I usually want to buy close or below the moving average of the long-term trend line that we have here, or sell above or at the 200 moving average if it was the opposite direction. So these are the main three reasons that I'm using moving averages: identifying the trend, support and resistance, an additional support and resistance zone, and helping me identify if this is a good opportunity or not. So these are the three key things that I think moving averages can be used in every single strategy that you may be using. And just so I can complete this video, I'll show you how you can add a moving average in TradingView. You can obviously do that in your own platform that you're using. So I will search moving average, find it, and just press it. Go to the settings and change the length to whatever you want it. I use the 50 and the 200. I sometimes use shorter ones. For example, the default for the length of the moving average in the TradingView is 9, which is a very short term moving average, you can see the purple color here, how snappy it is and how responsive it is to price. Unlike the other ones which are long term, you can see the white line, which is the long term, is not as responsive as the other two. So keep that in mind, and this is how it's supposed to be. So you can change the length to whatever you want it. You can change the source. So from what price should it be calculating? There are different methods here. You can choose open, high, low, etc. So it all depends on what you do. I just leave it to the close, which is the default one. And I also usually like to change the method instead of the SMA, which means simple moving average, which is what you will expect, just calculating the moving average by adding all the prices together and dividing it by the length, which is how you calculate any moving average. But instead, I want to be using, and I usually use the EMA, which is the exponential moving average. And the key difference between these two is that the EMA will give more weight to recent prices. So it will give more weight to what is happening right now in the market instead of what was happening 200 hours before. So that is why I prefer the EMA. So it will give more weight to recent prices instead of previous ones. Anyway, this is why I think the moving average is the best indicator to use and the most useful one. If you have any other questions, any other video ideas that you want me to cover, please do comment below. And if you enjoyed this video, make sure to like and subscribe on the channel. And thank you. Have a good rest of your day.